Welcome to the Barndo Bros Dirt to Done podcast, your go-to show for everything Barndominiums from dirt to done.
It's
Join
not
us, your
boring.
hosts, Richie, and of course,
It's
Geoff.
really, y'all, it's a big deal because folks don't think they can afford things.
Yeah.
And I need you guys to make them believe, and we'll bring up some West Coast, South Coast talk, because there is a lot of stuff. There's a lot of folks moving from West Coast. Got multiple customers right now that I can't use Matthew because I can't get him to work outside the state, but I've got 2 new loans that I had to go search for national lenders like this Kansas City bank.
Mm-hmm.
They're in Kansas City, but they're going to do a Nevada loan because I have
We
people.
can find other brokers in different states.
Will
so,
you
like,
be able to benefit from that? Yeah.
No, but if you're benefiting from it, I'm benefiting from it.
I love Matthew.
That's why doesn't always have to be monetary.
Get referral partners.
Like
They better pay you something.
Say Click and Close or AFR or one of these other, builders. They or lenders. They have different brokers in different states.
Yeah.
So like I could go to AFR or Click and Close and say, hey, who's a broker that you would recommend for a Barndo in Nevada?
Okay.
And they'd be like, oh, well, we've got these few brokers,
So I don't know why that light went red, but it worked. Red light button. Whenever you're ready, you roll it in. It's recorded. Welcome back to the Dirt to Done podcast. Some of you guys will not be able to see me. You'll be listening to us, Spotify and Apple Podcasts and all those things. But I want to tell you that I got the best looking guys in the room, not myself included, but the other guys in the room. So hopefully you can see this video soon. This is a beautiful segment called Show Me the Money. The problem we have in building Barndominiums is that we have these big dreams and we ain't got no money to fulfill the dream. So we got in a beautiful relationship with my brother, Matthew Bramow from Model Mortgage. And I love that he brought our brother Garrison, which I don't have your last name, Garrison.
Groeschke.
Great name. Garrison Groeschke.
German. Yeah.
Do you play hockey? Like, I don't, and he's from the East Coast, which is beautiful. He's coming down from Jersey.
New Jersey. Yeah.
So we've been talking about East Coast, South Coast, West Coast, different things, values, recession, stuff happening, political stuff. And I think, man, there's really a lot going on. And what's nice about Texas is we have some beautiful growth that's taking place, even from and after COVID, that's leading into folks saying, hey, I would like Barndo, because Barndo in our minds, and you guys are watching for the first time, hopefully you got to watch the last podcast that we talked about the bait and switch. The problem with some of the marketing that's happening is we're showing you an image of they're putting something online. It's like $135,000, 10 acres in a barn. Well, it's the bait and switch, but it's really appealing to what we want in our hearts is we want to get away. I want to live somewhere where I feel like I'm free. I don't have people breathing down my neck. I don't have an HOA that cares that I've got a truck outside or whatever it is. So we're trying to find ways to afford that lifestyle. And the beauty is that my brother Matthew has come alongside of us and believed in us at the Barndo Bros and Strakoa Construction that he would help us to secure loans for our folks, for our peeps. And he's doing it all over Texas, and he's even helping us to find lenders. And if you're out there, lenders all over the United States, we need you. Now we need mortgage folks to partner with us that I can, and I can't begin to tell you how much it helps. And I'll say this, that I say, hey, this is our friend Lisa. She wants to buy a Barndo. I'm going to put her directly in contact with Matt. Matt, can you now handhold her through the process? Because it's scary buying a house.
Mm-hmm.
It's a big deal. It's like getting married. You're building something that's going to last forever in your lifetime, right? And that commitment is huge. And how do I afford it? And how do I get there? So that being said, I'm grateful. Grateful you guys have tuned in. I've got Richie back there controlling the ones and twos. My other brothers are not up here with me doing the show, so hopefully God will help me do well today. Amen. So tell me about you guys. Tell me about your background, Matthew, and we'll start with you, and I'll talk to Garrison a little bit.
Definitely. I've been in the mortgage industry for 11 years now. I've been on all sides of this business. So from what you'd call retail, like a private mortgage company, it's a good place to start. I was there for, 5 or 6 years. I even went to a bank for 1 year just because I wanted to get the knowledge of how they operate, because I always knew I wanted to start my own company. And I own Model Mortgage. We are a broker, so we're not tied to one company's rates or one company's products. We do the heavy lifting for our clients, so we find the best products. best interest rates, best service, which just gives much more options to clients when they're looking for home financing, and especially partnering with you guys in the Barndo space. We have the one-time close loans that just a lot of people don't know about,
Yeah.
because it's not just your ordinary, hey, I'm going to go shopping for a house today. And you go to 3 or 4 different communities. Your realtor shows you some houses and says, which one do you like?
Yeah.
Okay, let's make an offer on it. I mean, it's a process, right? And I'm happy to get into it.
I want to, yeah, we're going to talk about the best idea for the different loan packages you can sell and what one-time close means. Problem is, in our world, we don't really know. Okay, FHA. Okay, we got a one-time. We got a HELOC loan. None of that really makes sense to the layperson, and even myself. So I have to go get educated. I'm going to act real dumb today, and probably some of it might be really dumb. I'm going to ask a lot of questions like, how do we explain this to folks that are listening today? But I do want to talk about Garrison because I think it's interesting that you would be here today from New Jersey. He flew all the way in. No,
I did.
This
week.
There's probably another reason why he's here, not this podcast. But tell me about your background, what you were doing up there upstate, and you're coming down here and what's going on.
Absolutely. I've been involved in the financial industry for the past 7 years. I got into the mortgage space back in 2020. And then the past 3 years have been in the broker industry. Met with Matthew, really solid guy. He knows exactly what he wants, knows what he wants to do. Definitely a great industry to be in. New Jersey is definitely a different market. It's a lot more competitive. We're seeing in North Jersey especially just tremendous lack of inventory. So there's a high demand for builders to rehab properties, to bring properties to market. But love the industry. I love being able to help out clients. I actually shifted more into the commercial space. So I love doing niche programs and products. There's a lot of opportunities for clients in the investment space, in the investment world, that I can definitely touch on and talk about as well.
You said folks are moving from Manhattan to Jersey. So they're still in the close proximity of working downtown, but they're out of the mix. And so Jersey's going crazy. It's so crazy. I spent some time in Jersey, not nice parts of Jersey. So I never wanted to go back. And we have a customer who's up in Jersey right now, and he's like, man, we're trying to build an upstate New Jersey. I'm like, what is upstate New Jersey? I want to go to upstate New Jersey. Wherever I was at was not where I want to be. So there's beauty too, right? Folks are moving out to the rural parts and they're actually building homes.
I mean, I live in an area where there's 8-10 acre lots. I mean, people have chickens and cows. I mean, there's a ski resort. It's just a different environment than what you think when you think of, Jersey City, Newark, those kind of areas where lots are selling for $800,000, $1 million, even more. You get a little bit further west, it's a whole different environment.
Do we do the same thing with New Yorkers? And we lump you guys all together, by the way. New York, New Jersey, the same thing.
Totally.
In Maine and whatever. Do we do the same thing with them that they do to us in Texas?
Likely.
Did you guys? Where are you from originally? Up north?
Morris County, yes.
Up there. Okay.
Up north.
So did you think everybody's on like horses and cows and stuff out here? I'm from the West Coast, so when I came out here in the 90s,
Texas ranchers.
Oh man, I was thinking we're gonna get a longhorn cow. It's gonna live in my backyard. We're gonna have 6 horses. So there's always the misconceptions. What I do love is when folks from different areas, especially when we're talking about real estate, can come together and give some insights into the industry, because there are some things that are beneficial to coming to Texas right now, tax wise and building, and there's land. There's affordable land still. It ain't staying affordable. It's getting expensive, but there's still areas that we're trying to tap into for Barndo communities. And if you guys know, the hope is not to do the 1s and the 2s and the 3 houses as much, although we love doing them because we love working with individuals. We want to build communities that promote safe living, healthy living, maybe faith and family, that you guys can get away to, and everybody has at least 1.5 acres where, you have space to be you. And I think we've not been able to afford that, because if you think about 1.5 acres in the Woodlands, Texas, it would be $2 million. There's no, you couldn't even have so it's unobtainable to some of us, especially living, close to Houston. But there's opportunities. We'd love to create space like that folks can come out to. So that's it. Okay. I am a Barndo buyer I've come to the Barndo Bros. They've got some neat little plan for a baby bro or a big bro or a farm bro or all these plans. And then Matt, I've got my plans. I purchased it from the Barndo Bros. What do I need to do to build this? What options do I have?
Oh, absolutely. So let's just walk through the process.
Come on.
So you're excited. You want some land. You found your city slicker, or your big bro, or whatever it is. You got to get approved. Okay. But a lot of people are very scared and kind of like, well, I'm building a house. Like, I'm not just going to buy a house. So how does this work? So really, with our one-time close product, okay, we have a variety of different options. But first, you got to get the pre-approval done. So we make sure, hey, you can continue and afford it and know your options. What does the credit score look like? What's the down payment look like? Where do you want your monthly payment to be, right? You got to make sure these things align for people. So the three most common one-time close loan, products are conventional, which, 5 to 10% down. You don't have to put a huge 20, 25% down on this. It's literally following the same guidelines as you would if you're buying another resale home. Mm-hmm. So you can go conventional, you can go FHA, right? You got to stay around that 550-ish loan limit. So you got to take that into consideration
with the land.
Right? Well, with the entire just end loan amount.
Okay.
Right. So, and then we have VA as well. And the cool part and why they're called one-time close is because you can have it two ways. Say you don't own any land, but you want to do a one-time close product, you get to purchase the land and the build at the same time.
Yeah.
So you're able to finance the whole project at once. Or a lot of people already own some land, or maybe it was gifted to them from, their parents or whatever it is. You own the land, and then you can use the equity portion of the land to basically cover the down payment. Obviously, you have to see what's that land worth. What are the specs and the project going to be? But it's a cool way to actually not have to come to the table with a bunch of cash.
Yeah.
But all of these products with the minimum down payments, being essentially the same as any other, home you'd go buy, because it's one-time close. You're able to get the land, you're able to get the build. We then get the specs from the Barndo Bros. Like, hey, here's the contract, here's our plans. And then the loan's underwritten off of the plans, and it's appraised off the blueprints. So the loan closes like any other regular loan in, say, 30 to 45 days, right? And then the build starts.
Yeah.
So the way you're going to pay for this is on the draw amounts that Barndo Bros is taking, right? Yeah. So say the first plan is $100,000, the draw. Mm-hmm. You're going to pay interest only on that first $100,000 until, let's just say, that portion is complete. Then we go and we check the box. Okay, they did what they said they were going to do with the first $100,000. Now we need another $200,000, right? So then more work is done.
Okay, this is good.
Mm-hmm.
What's my interest traditionally on that $100,000? What am I actually paying while I'm building this thing? A month?
I mean, maybe if it's 100,000, maybe $1,500-ish dollars, somewhere around there. I mean, every rate is going. And here's the thing: the construction rates are always going to be higher than it will be on maybe it's 7.5% to 8%, depending on credit. But that's just during the time of the build, and it's interest only, right?
Yeah.
So to say exactly what it's going to be, I mean, I'd have to look at it,
I
specifically.
segue here because it's very important. We've had a lot of conversation with folks that we're now getting into, the room with finance. And what's happening on a brand new construction is there is going to be this term that we are constructing. You're paying X amount of money based on interest. And then once that's done, and what he said earlier is now we're refinancing that thing back to a normal interest rate. Construction costs money. Right. The bank is saying for the next 6 months that you're building this thing, it's going to cost you interest only, right? And then by the time it's done, we're going to refinance that entire property, land, house, turnkey, ready to go, and it's going to be a different rate. So don't fear the construction loan. It's a beautiful thing to get started, to get it moving, right?
Yeah, and you don't have to refinance it because it is essentially a 30-year loan.
Yeah.
But it would make sense, right?
yeah.
Because anytime in any market, if like let's say, I had a client at a 7.5% interest rate that we, helped them finance a year or two ago. Now we were able to get them 5.875.
Yeah.
It would make sense to refinance. So
Yeah.
as long as it makes sense, which 99% chance it probably will. Yes, you'll complete it. Then after 6 months, 6 payments or so, we'll look at refinancing you into a more long-term vision of a loan, right?
Yeah.
Just to get that interest rate lower. And obviously it depends on the market, but that's the game plan when you're putting these loans together.
I like that this information is going to be good forever, but I want everybody to know that it is October of 2026. What are our interest rates looking like today for homes?
25 or
25.
26? I mean, we could jump to the future.
I was jumping to the future. 2025. Sorry.
Yeah.
October 2025. What are interest rates today? Have they come down a little bit that you guys have seen?
On in general?
Yeah.
Yeah, I mean, I would say conventional, you're teetering in the mid 6 range right now.
Yeah.
FHA, you could probably dip a little bit under 6%. Same with VA. And every day rates are going to change, right?
Yeah.
Because the market is what determine the interest rates. And
Yeah.
it's not necessarily a Fed cut that's going to change mortgage rates,
Okay.
right? Yes, that will change things like credit cards, home equity lines of credit,
Yeah.
auto, things that are directly tied to the Fed. But the mortgage rates are tied to the price of the mortgage-backed security in that market, right? Just like stock prices are up and down, so is
Yeah.
the bond market. And really the kind of the easiest way to know what's going on with interest rates is following the 10-year treasury.
Okay.
So
Definitely.
if
Yeah.
I would say Garrison could
Definitely.
touch on that.
Come on.
Yeah,
Garrison.
10-year treasury bill is what you need to follow. It's a direct correlation of mortgage interest rates. It just depends too. You can't expect to go online and type in, what's today's interest rate.
Yeah.
You're just not going to know. Retail banks have different margins, brokers have different margins, but in general, the 10-year treasury yield, mortgage-backed security market, that's where you're going to be able to identify what direction
How
the
do I
market
do
is going.
that?
And
no finance guy. I don't understand. How do I follow a 10-year treasury? Tell me.
It's tough.
Yeah.
I mean, it's not like you can just look at it and know. And there's a lot of factors. I mean, consumer price index is one of them. Where's the economy at today? What's our GDP doing? I mean, when you listen to the Fed meets on a bi-monthly basis pretty
Yeah.
much. Jerome Powell was appointed in 2016, and he's done a lot with increasing and decreasing the rate. We just saw our first drop in over a year and a half down to 7.5 to 7.25. That's big news for mortgage rates and
Yeah.
lending rates across the country. When it comes to the 10-year treasury yield, you can do a lot of research on it. Just the trend is if it's going down, rates are coming down, mortgage rates are coming down. If it's going up, opposite.
I've noticed that our president really doesn't have the ability to chop rates like probably he wants to with old Jerome. But
Well, interestingly enough, Jerome Powell was appointed by Trump in 2016, right?
yeah, okay.
And then he increased rates, Powell. And then 2018, they met in December, and Trump said, "Look, you're going to drop rates at every meeting, or else I'm just going to get rid of you." So the Fed prime rate went from 5.75% down to like 3.25. And I think we're going to see Jerome get out of here in the next 6 months when his term's up, 3 months,
yeah,
and it'll be a whole new ball game.
that would be good.
Yeah.
It's hard. I have some folks from the West Coast, and they have, like everybody who refinanced during COVID, they have a 1.9.
That's wild.
I was like, God.
That's where we were at. Yeah.
And 1.9, I said, your money's free. It's free house money, and they're going to sell out of San Jose or San Francisco, and they're going to move to Nevada because that's kind of the next flea for my West Coast folks, is to get out to Nevada because there's some land out there that's pretty inexpensive. And I was thinking, man, I don't know what we're going to get you financed out, but I promise you ain't going to be no 1.9%,
Right.
Well, December 1980 was 21.5%.
Wow.
I mean, as the richest country in the world, I think we should be damn near close to 1%.
Yeah.
2%.
Amen. That's what I'm talking about. That's why we brought him all the way in from Jersey. Speak some truth to us. Okay, so you did mention something. I'm trying to do case scenarios and case studies. Let's say that I do have a property or properties, and I'm thinking to myself, well, I've got these properties. I can either sell them and I can take a capital gains hit on some of these properties, or I could pull money out of that property to build the Barndo of my dreams. Whether the Barndo is my vacation home, my forever home, my compound, my family compound. And just to let you know, Garrison, if you're a little bit new to the Barndo world too, I was talking about this is lifestyle, this is legacy stuff. Most folks are building these things to pass on to next generation.
Right.
And when I say that, it's like I've got some friends from upstate New York, right? Their family had to, because of constraints of government and things that are going on, they had to sell the farm. They had the dairy farm up there. Beautiful dairy farm. Well, in order for them to sell that farm, the taxation on that was incredible. They had to now reinvest into it. The sad part was the kids ain't getting the farm. You know, they're not getting that. And even for them to sell it, they had to do a 1031 exchange to get back into another property. I was thinking, man, we don't have the farm to pass down to anybody anymore.
That's rough.
The Barndo becomes the farm. You know, the Barndo becomes, okay, I build one building, I build another building, I build 3 buildings. Now this 5 acres is really tracking to be some sort of a compound thing. So I have property. I want to do something. Can I come to you guys and say, hey, I do have equity in my property. What can I do with that equity to either refinance or to get me some cash so I can go build what I want? What do you think?
Yeah, well, there's options, right? And equity is the answer.
Mm-hmm.
So things are always going to come down to what can you qualify for?
Yeah.
Okay. And then it's our job to give you your options and educate you on what is possible. So a couple of things you could do, say you owned a house for 15 years or you've got a few investment properties.
Yeah.
You could do essentially 3 things. You could do a cash out refinance, which is locking you into another longer term year loan, right? I mean, depending on the years that you want, but you also have to be conscious of what your payment's going to be. So the longer the term the loan, the lower the payments are going to be.
Yeah.
So you could do a cash out refinance. You could do a home equity line of credit, or you could do a second mortgage on it.
Okay.
Which is a true like second lien. It's not variable like a HELOC, which stands for home equity line of credit. Okay.
Okay.
So those are kind of the 3 options. I mean, Garrison, what do you think
What's the
that you
best?
see, you know, as far as what most people would do in that situation?
Definitely. I think equity is key, right? So if you purchase a property, if you purchase a primary investment property, pay down the principal. Try every month to pay that down. With a home equity line of credit, and it's important for people to know, they can use these funds to purchase investment properties, to purchase anything realistically. You don't need to take a home equity line of credit and use those funds just for home improvements, just for paying down credit card debt. You can take those funds and realistically use them for business purposes as well. But the home equity line of credit, I think, is definitely a viable option. But I definitely would prefer and suggest that the closed end second lien is a better option.
Okay.
And we go off of combined loan to value, right? So if your home appraises at 500 grand, we can go up to 90% combined loan to value. So if your existing lien is 350K right now, and 90% of 500 is 450, so we can get you up to 100 grand. Now, if you pursue the home equity line of credit, it's going to be a variable draw, right? So let's say you get approved for the whole 100K, but you only really need 30K at the time to rehab your kitchen or something. You can take the 30K. Next month, you could take another 20K. It's variable interest rate as well. With the closed-end second, like Matthew said, it's a straight lien. And you can get a 10-year, 20-year, even a 30-year closed-end second. And your monthly payment on that on 100 grand might only be $600, $800. With the HELOC, it's variable. The rate's going to change. And then the cash out option, there's options for you to take equity out of your property.
Do you think that's smart?
I think if you're have the right people and the right advisors, it's smart. But if you're just taking money and not knowing what to do with it, it's not going to be a good decision. But for the sake of this conversation, right? Like we're saying, hey, you have these assets, you have equity into it, but equity is like thin air, right?
Yeah.
It comes and it goes because depending on the market, you could have $400,000 of equity, but then in 2 years, you know, the market goes down, you might only have $200,000 of equity. So knowing when to time it and knowing what you're using it on is the most intelligent thing to do. And in this case, hey, I've got, you know, a property here, another one there, maybe 2 or 3, but you don't have the cash that you want to build your dream Barndo, then those are viable options to take some equity out, use it to build the Barndo, and make it awesome, because you guys can put anything together for these Barndos. You were just telling us about, these huge porches with fans and,
Yeah, absolutely.
make it your dream
Make it,
Barndo, right?
definitely.
So if you have options and equity in different properties, talk to a mortgage professional, a banker, just to figure out what's the best route to go.
Yeah. Well, this is what excites me too. I realize finance is not a lot of fun to talk about, but you got to realize the folks that are watching or listening are people that are really investigating to say, what do I want to do to make the move? Most of these people are making a move from that which is traditional, which is these little cookie cutter neighborhoods, and they want to live in something different. Y'all, I get it. Like, I feel like God is out there and different. I feel like I need to explore the outdoors. I need to get away from neighborhoods sometimes, even though we live in a beautiful neighborhood in this area. Richie and I, you guys know Richie, my other compadre over there, have thought, man, what if we had a little, Barndo community that we can build out or we can rent out? By the way, have you looked at Barndos on HAR, which is our Texas real estate app? Oh, just go look. Just try to find a Barndo that you can afford.
Yeah.
The resale value of these compounds is astronomical. I'm talking a 3,000 square foot Barndo. Why? Because they went ahead and they got 3 acres, whatever it is, and they just built this beautiful thing out. I mean, we're at $700,000-$800,000. So what's nice is we don't have to spend that money to build it. And I do think there's a resale value to these that people actually desire. Now, not everybody's going to take the risk that my customers that are listening, watching right now, they're going to take, which means I'm going to take money out of my hard-earned savings and build what I want. But I'm telling you, the reward is that these things have value, and they have value to the folks that don't. You're talking about a limited resource. There's a limited amount of Barndos out there for you to buy.
Yeah.
And you can't even find them. When you find them, they're so expensive, and they're awesome. I'm like, dang it. What's nice is that our mortgage companies and our insurance companies and everybody has now got on the Barndo bandwagon saying, okay, these houses are a little indestructible. Yeah, we should insure them. Oh, wow, these things do have great value because they're 5,000 square feet and they've got these great spaces. Okay, we do want to put a valuation on these things. Another mortgage lender, and I'm about to end this, I got 3 minutes. Another mortgage company we were on the phone with, which is interesting. They're doing nationwide loans. Basically they were saying, man, we've really come alongside now when we do comps. I might be misquoting her. We're basically going to take one Barndo comp, and now we're going to comp with the rest of the stick builds that are actually comparable in that area. Oh, that's kind of interesting, because there was a struggle to comp a Barndo. What other Barndo are we going to compare to, right?
Yeah.
Right.
But now they're allowed to or able to compare to other similar custom built homes.
Yeah, square footage.
There's the value of your Barndo just went through the roof again, based on a 3,000 to 4,000 square foot home. What's it going to be in our area, right? I think it's like there's a fever. Okay, there's a little bit of a Barndo fever. I know I got my bell, and the only prescription is more cowbell. You can't see that, but it's written on that bell.
Oh yeah.
There is a fever right now. We're really trying to catch it. It is very niche, guys. It is a special commodity. It's a special customer that actually has vision for their life rather than somebody just wants to get their kids in a good school district. So we do deal with them a little differently. The beauty is I have a hand-holding organization that is willing to work with us and be the finance, brotherhood and relationship to get us to that place where we actually feel like, okay, good. I feel good. I've got what I need. I can get finance. I can get this thing built, and I can build out this thing that I want to pass down generation to generation. So I'm very grateful for you, God. Garrison, I'm really grateful to meet you. I just met him for the first time today. And Matt with Model Mortgage, we're going to have links below. Matt is one of our exclusive lenders to the Barndo Bros and Strakoa Construction. I use him exclusively because he's easy and he actually answers his phone. And we probably have 4 or 5 loans just from the last month or so that he's actually working on, which has been beautiful. Our customers are happy. Even one customer, do I have time for this? You have 1 minute. One customer who didn't have great credit, they really needed help repairing it, and Matthew got him in touch with a repair company. And I was thinking, man, I hope this works out. They came back 30 days later. Hey, we're ready to buy a Barndo because our credit got repaired.
That's awesome.
Like, praise you, Jesus. So we're grateful for that. Thank you guys for listening and watching. The idea of Dirt to Done is that these guys, the mortgage function is definitely part of the Dirt to Done because it's a part that we all have to get through if we don't just have millions of dollars sitting around. And even if you had millions of dollars, why would I spend it all when I can get really fair decent, mortgage rates, and I can get things that are going to help me to save my money, but build my dream home and be excited about the future and what I'm going to pass down to the next generation. So I'm very grateful you guys are here today. And see you on the next show. We'll have my brothers back. We should have a fun new show for you guys with more folks that are helping us to get to the end of our goal, which is a Barndo Nation here in Texas and all of the United States. And we're excited to be a part of your journey. Reach out today, www.thebarndobros.com.